Welcome in, everyone. Tonight we're going to recap a Amazon trade idea that was strictly in Discord. So for those in Discord, obviously know this, but I'm going to make this public for those that may be interested in this. So we're going to go over the trade idea, we're going to go over the option flow, we're going to go over the entry, we're going to go over the movement of the stock, and the contract price. So for those in Discord, obviously I always post our nightly watch list. So our flow analysis here, which I'll pull up the actual flow here in a second, but I always post the flow analysis with everything here as well. So here was our entry in the morning. So I had two entries. I actually wasn't going to be at my computer for most of the day. I didn't get to trade Amazon today, but and yes, I did spell aggressive wrong there. So I had two entries here. So I'm going to kind of go over both entries and how I kind of got both entries as well. So we had the 180 call less than 177.81, or for the aggressive entry 178.68. So let's pull up the flow here first. So this is the flow from 4-1. So every night what I like to do is I like to pull in the flow feed. I have a list of a bunch of companies that I like to pull in, and this premium here obviously for Amazon on 4-1, when I made this, the premium was 20,000. My premium does not stay static at 20,000. This changes from ticker to ticker in the same day. So it's just kind of trying to see what's there. So you'll the longer you trade and go through unusual whales, you'll kind of figure this out. Just perfect example here. So like if I did 90,000 on Amazon for yesterday, I'm missing a bunch of that little smaller flow as well. So you can see I didn't have enough of, or I didn't get as much flow there. So it's kind of adjusting just in time on what you see. So we had 20,000. I do have videos on filtering as well too. I won't dive into that, but you see with 90,000, you're missing a big chunk of this flow. Even, I mean, this whale right here was rolling, I believe. So, or multi-leg, but I mean, you'll miss like that smaller flow and stuff. So, looking at the flow here again from 4-1. So, starting out here, we had these 182.5 calls. Whoops. Coming in pretty close to close. Can't 100% say it's the same person, but again, kind of based off size, premium, I would make an educated guess, probably the same person. These 167.5s, a little deeper in the money, not super deep, but still a decent amount of premium there. A little shorter term as well. We also, well, at the 14.55, we had this big block of trades actually. So we had the 9-day, the 412, 172.5 calls. Again, $8 in the money. Not super deep for Amazon. You are still exposed. I tend to stay away from deeper in the money just because if the trade starts going the incorrect way, you can exercise. You're not going to lose as much money as you would with options, is something being out of the money. So keep that in mind. $108 in the money, not super deep. Still, you are exposed. So coming in at the 14.55, you had all the 9-day expiration here on the 172.5, 175, and 167.5 call. Good premium combined between those. We had a short term one, a 4.5, 175 call here, 56K. We had a multi-leg trade, which I was kind of messy, so I kind of ignored that one. Coming down here as well, we had some really deep in the money 145 calls. These I did ignore, but this obviously you're kind of getting the sentiment of what people are thinking about Amazon. We also had this 175 call for 412, 125K premium. Again, oh, that was part of this was a roll, I believe. So, yep, you can come down here as well and kind of see what or call debit spread here. And if you don't know what those are, you can always pull it in the option profit calculator here on Unusual Whales. Pull it down here and you can see it's kind of, they can either have it go both ways there as well. I don't trade spreads, so I ignore spreads for the most part. which if you want to do also on unusual whales, can always come down here and just do single leg only. So makes it a little cleaner looking as well. So coming down here, obviously, so those 145s deeper in the money, not a huge deal to kind of ignore stuff like that. Again, just because they can exercise. We had a large bid side put here for 104K. And just kind of some other overall flow for the day. Kind of ignored some of it. I mean, I tend to look at the flow later in the day, but obviously we had some bearish flow here in the morning. So coming back up here, so that's kind of the flow there on Amazon. Just I tend to look at the last hour or so, which you can see is pretty bullish here. So now moving over to the chart. Pull up my Weeble. So Amazon, so our two entries here. I'm going to first go how I found these entries. So again, my entries were 177.81 and the aggressive one 178.68. So 177.81, that was our typical normal one. 178.68, you can see we bounced pretty close to that. So how I like to find my entries, I usually like to start on the longer time frames. So I'm going to just kind of quickly touch on the entry that didn't trigger, but you can obviously see good support in here, good support. Oops, of course I moved it. What were we at? 177.81. So close enough right there. There we go. So obviously good support, good support, good support, good support, and that's all we had for Amazon to work with. And I always like to drill down, so it starts to look a little cleaner now. Your half hour, obviously, good support in there, good support in there, good support in there, support in there, so on there. So I'm going to delete the conservative entry here and go with the entry that actually triggered. So with this one, obviously, this is today, so this isn't what I went off of. This I drill down to the 5-minute chart. I tend to kind of work my way down, and I do trade on the 1-minute chart, but you can see we had good buying volume there, good buying volume there. We stopped there, bounced, and again, 5-minute chart right now, so this is where IV comes into play. You have this huge rundown, and then we just hit a brick wall. Everybody's still thinking, I'm going to buy puts, so put prices go up. People aren't thinking calls because we've made almost $1 move down there. So you stop. Even if you chop here, your contracts for calls would be going up because IV's cooling for that, and people may start getting calls. So that was a good spot there. Again, good buying volume in here. Good bounce there, good bounce there, bounce there. And again, bouncing there and staying up for a little bit. So now drilling down to the 1-minute. So again, here we'll go to today's entry as well. Could have got a little better of an entry, but still not horrible. So coming over here. So coming back here, obviously, here's that good buying volume again here. Buying volume, little pop there, pop in there. And this gives you enough time to size out as well. You don't want to be in a really, really quick trade that's like 30 seconds, 2 minutes. I like enough time to have contracts where you can adjust your stops up, size out properly. So again, bounce there, and there we did not bounce, obviously. But here's that one spot where I was talking about on the 5-minute, where we just came crashing down, stop, bounce up, and that would give you enough time to size out and adjust stops. Again, in this little area, bounce up. Good buying volume here as well. And just overall support in this area. Bounce, bounce, little bounce there as well. So this is kind of how I like to find my entries. Again, it takes a little bit to kind of figure this stuff out, but obviously just kind of looking at the charts and kind of making it simple. Day trades more to, I'm worried about, let me pop this back out. With like day trades, I care more about what levels we're at on the stock versus like if we look at a day chart, like if we're following a trend up, etc. All that. Day trades, you're kind of just looking for that intraday bounce or drop on stocks. So let's look at the contract now for today. So I had the 180 contract called out here and just bring it back here. So 180 contract there. So typically being $2 out of the money, and this early in the week, these contracts were a little pricier, and I'll show you everybody why I went with the 180s versus the 182 and a halves. So let's go with we're going to go over the trade first. So we're going to go the 180s, and I'm Central Time. So we triggered about 8:41 here, depending on when you got in, and I'm Central Time. So 8:40, let me reset the chart here. So here is our 8:41. So depending on when you get in, could have got in about 130, 128, 134. We hit 120. So I mean that's very close to a stop out, but again, I did make notes if there was a stop out, I would take it as a momentum. Obviously, there's notes in here as well. So entry, I'd break up as momentum. You get the idea. So actually, that was the regular entry, but we do a lot of momentum entries in there. So our entry, we'll say we'll take the mid here about 130 because you're not. I tell everybody not to slap the ask. Wait for a good fill. So 130 fill here, and obviously we came right back up. You're more than likely gonna, and if you had a stop, because this is when our JOLTS data came out, it probably would have triggered there if you actually had automatic stops on. But from 130 up to 151, you're still looking at about 130. What did I say? 151. I mean, you're still looking at about 15%. I like 20%. That's my risk. I like the 2-to-1 risk reward ratio. So, I mean, about 15% here. But if you held throughout the day, you can see the contract price. And unlike a Friday where theta is really decaying the contracts, the contracts are very fresh in the week. So you're not going to get that theta decay. We topped out at 222 today, which obviously you're not going to hang on to those. More than likely, you're going to probably size out around this 180-ish area. But that full range of the trade, we touched 222. So that's a 70% return there on that. So, but more than likely, even in here, if you get up to that 161 level, you're probably going to be, your stops are going to be hitting in this 150 range. So hitting the peak is very, very rare unless it's just a straight up move, which typically stocks don't do that. So that ended up hitting, I mean, top range 70%. Not a huge deal if you don't hit it. I mean, securing 20% over and over and having the good risk management of, I like to do minus 10% stops. Very easy to recover from versus those 40, 50% stops. So now for this, so obviously the contract was a little pricier. So 130, and I'll show everybody why I didn't like the 182.5s here. So again, we triggered at 841. So I like contracts that are kind of priced between 70 up to $1. So if you would have got in here at the low on that candle, this would have been a stop out right there. These lower contracts do not move as nicely, and you're going to stop out more. This is why you don't like trading these 11-cent, 30-cent contracts. You're more likely to stop out versus buying actual good valued contracts, in my opinion. So I like doing that, but I mean, obviously you can see this would be a stop out here. And yes, these hit 100%, but you're sitting in all, you need a bigger move. And you can always look at the delta on these. So, I mean, delta's not horrible on these, 36 there. But then when you look at the 180s, that delta was 60. So you get that 60, you get 60 cents added onto the contract per dollar move. So theta you don't have to really worry about on Monday, Tuesday, Wednesday-ish. So, and that's more of a swinging thing. So, but yeah, so that's kind of why I avoided those cheaper contracts. But otherwise, that's kind of all I have for the flow breakdown, kind of the entries and going over the contracts. So, otherwise, yeah, have a great night, everyone.